Don't get impatient, stick to your plan, and that's how you're going to see trading success. What's up, everybody? Josh from Red Shorts Trades. Today, I wanted to jump into a really beautiful set of put options that I took on the Qs as well as AMD in order to secure some really solid profits. I'm learning a lot about myself over the past couple of weeks here as I trade, but getting consistently better at my entries and my exits. This now marks the third day in a row I've been green. I've been green 3 out of the 4 days this week so far, which is pretty exciting. So I wanted to share what I saw, what I did, and we'll jump right in. So here's the trade that I ended up taking on the Qs. Ultimately, what I was looking for, we saw a really big push down yesterday, and then we just kind of consolidated here around the 484 level all the way down to the 482 level. And then we saw a really nice push up pre-market. So first thing I always do when I jump in the trade, or before I jump in the trade, pre-market, I'm taking a look at marking up my pre-market highs, my pre-market lows. I want to see reactions of what's actually going on with those particular levels. And then if the spread is too far, which in this instance, there's about a $4 spread between the pre-market high, pre-market low, usually what I'll end up doing is I'll use the opening 5-minute strategy. What the opening 5-minute strategy is ultimately I'm looking for that first 5-minute candle to get put in. And then I mark out the high and the low of that 5-minute candle. You could see that put in here. Effectively, it was up here. I ended up moving my line down here. I'll tell you why in a minute. But this pre-market low, or this 5-minute low here, ultimately serves as a really good entry, especially when the spread is too big. And obviously the risk to reward is really solid because you can break down to that pre-market level. And so what I ended up seeing was that I set that 5-minute high, 5-minute low. And then effectively, I was looking for a break and retest of that 5-minute low to be able to trace down here. Now that first pullback into that, it sliced through, we pulled back, and then it just shot through and did not come back for that retest. So I just waited. Key number one, make sure you're waiting for the right entry. Don't try and force the right entry. So my plan after that point was, okay, we're either going to break below this pre-market level, which would have been another entry point, and chasing it all the way down to the prior day low, or we would trace back up to that 5-minute level and effectively retest that level and then bounce back down. And so what I ended up seeing, we saw a really nice push up, a really good momentum push up. And then we saw this beautiful hammer candle went all the way up. I thought it might be shooting to the upside. Cool. Then we'd have to change what we're thinking about, how we're approaching the day. But it shot up in 1 minute and then pulled all the way back down, giving us this beautiful wick here, showing me a really nice entry to be able to go short on this and buy a bunch of put contracts on the Qs. I saw something similar on AMD. So AMD was actually reacting to the pre-market level. This was slightly earlier, but to this pre-market level, we saw this green candle here. We saw this red candle break, and then we saw this green candle push up, and then sellers came in and pushed it down. Really nice wick. This is great hammer candle, great entry. Ended up holding this, even though we ended up pulling all the way back up here. I set my stop below the wick, or above the wick of the breaking candle, and was able to hold this trade all the way through. But the Qs ended up wicking against this 5-minute low, and I set my stop above the break of structure. Now, the initial breaker structure the argument could be made, just put it against this particular candle that broke that low. I ended up choosing this because we saw a bunch of touches here on all these wicks. This was a stronger point of confluence and market structure break. If it broke above this would have been a cleaner break to the upside, which would have ended up being a smarter way to get out of the trade. And it was a good thing I did, because if I put it here, I still might have been in the trade, but just gave me even more confidence, giving myself a little bit more wiggle room in terms of where my stop was set. But as you could see, we saw minutes, probably about 10 minutes of consolidation. And all the while, when this happens, this is the toughest thing about trading I have found. When this happens, you're seeing your P&L dip into the red all the time, especially if you're sizing up. I ended up having 10 contracts in this to be able to float all the way down to the downside. But then you started to see some breaks when we started to see some break of structure, we had a bear flag happening here, and you started to see this come down and break that structure. We pulled back up, and then we just started to see it shoot all the way down. Now, I had 2 profit targets, and this is point number 2 that I'm really finding out about myself with respect to trading. First thing is, make sure you're playing with the rhythm and the momentum here. We were a clear momentum to the downside, lower lows, lower highs, lower lows, lower highs. We started to pull back. This is still a lower high. And then we ended up shooting down even further. So the momentum of the day moving into the opening of the day was to the downside very clearly. And we had a very clear entry point, a very clear stop loss that was rooted in market structure, which we need to make sure we understand market structure. I'll do more video content on market structure on the channel moving forward. But then also making sure we're paying attention to what the stock chart's giving us. We have a very clear bear flag happening. We see a break of that flag, and then we want to see it continue to chase to the downside, which is ending up what we saw. We also had very clear profit targets. Profit target number one after that 5-minute low retest that we had was the pre-market low for the day, which was chased all the way over here. That was profit target number one, which is ended up being where we ended up pulling out of. Had some other things happening this morning in the day that I was like, I don't know if I can sit here. I had to take care of the kids. It was a whole thing. But my second profit target was down here. And what I have found in every single trade that I've taken this week, my second profit target gets hit, which is giving me additional confidence that I need to just hold through to my second profit targets, at least hold runners through to my second profit targets, because it would have hit. Obviously, we continued to downside. We also saw a second entry here, by the way, which was a beautiful retest of that pre-market low. Now, it didn't fully wick didn't wick the way I wanted it to. So I didn't take this trade, but I probably wouldn't have taken it until it pulled back into that zone. But regardless, we also had a nice pre-market. This candle here could have been a potential entry to the downside. But at the end of the day, this was the trade we took. We stuck to our plan. We didn't get out too early just because things were pulling back and forth and we were in this chop. We let the chop play out. We let the trade play out, because this gets to something that is becoming near and dear to my thinking and how I trade. And that is, don't enter into a trade unless you're planning to stick to your plan, primarily because you look at all you're going to assume for losses. And the challenge that we have as traders, oftentimes we hold on to those losses too long, right? We think it's going to continue down, and then you over-index on losses. And this is my story too. When I blew up accounts, I blew up my first account. I kept holding losses too long, waiting for it to extend. I was just like, I would justify why I was holding loss. But if you're going to hold through these losses and you're going to actually respect your stops that you put in place, you have to be willing to hold to your profit targets, because if you're constantly trying to get out early, it's not going to work out, because you are going to have more losses on your dollars because of how the options contracts work if you're trading options than you are with your winners, because winners need momentum in order to really get the kind of multiples on the option contracts that you want. So just jumping in here, this is my new trade tracker that I have been building for myself. So I know there's tons of options out there, but I just love looking at data in specific ways. So I figured I would build my own. This is pretty cool. I just built this over the weekend, and then I finally have it running this week. And as you can see, there are some really cool, interesting topics with respect to this. And one of the most interesting ones that I have found is the average from the starting point of the stock when I enter it to my first take profit versus to my second take profit. More often than not, I am finding that my first take profit typically is sitting at about $1 of gain on the stock price compared to my options, and the second take profit is around $2. But what's cool about it, I want to expose, is this column here. Take profit one being hit, take profit two being hit. Now, on all of the winners, any trade that I've taken this week, every single one of them has actually hit the second take profit zone, which is just confidence for me that I'm building in terms of making sure that I hold at least runners to my second take profit. And as I continue to build this out, it'll build more confidence for me to make sure I'm holding those runners. But I can't recommend this enough. If you haven't jumped into like TradeZella, if you're not really, equipped with sheets or building your own type of thing, there's a bunch of great tools out there for journaling. And I never thought about journaling this way until I started to really look into a lot of those tools that exist, and building it from data is just going to add even more confidence to the trades that you're taking. So that way, because everything about trading is confidence. You have to go in, make sure you're confident in your entry, confident in your stop loss, confident in the levels that you're trading on. So that way you can hold through the move. Otherwise, you'll get chopped up with the noise of the chart. So I hope this was helpful. Really beautiful trade, again, that I saw, taking the 5-minute opening candle strategy and then ultimately looking for a break and retest of that 5-minute opening level. And then very clear profit targets, very clear stop losses, and then The long and short of it is make sure you hold your trade. Stick to the strategy. You entered it for a reason. Hold to your winners so that way you can see profits. Hope this was helpful. If it was, share it around. Definitely hit that like button. Really appreciate the support, and pound that subscribe button so you can continue to get more content. And until next time, we'll talk to you soon.